Hello everyone, welcome to INR Bonds Search for Yields, issue number 68. In today's topic, we'll talk about how bonds can help investors in their financial planning. So this video is for the investors like the parents who are planning to send their children abroad for higher studies, or for the planning to invest a surplus of cash into an investment product which can help them at the time of, which can help them during the wedding costs, or for the retired, the retired government employees who have the retirement benefits and they're not sure of where to park their funds in order to beat the higher inflation. So it is also for the investors, equity investors who are trying to time the equity markets in the short term. So given there is a lot of volatility in the equities, this video should help them how to go ahead about investing in the equities in the near term. So today the core concept will lie around investing in the corporate bonds space, especially the shorter ends. So when the pandemic has started in 2020, everyone knows that the interest rates were set at record lows, which caused the FD rates and the bank saving rates at much lower than 3% post-tax in India. So which is almost causing all the investors who park their funds into the FDs and the saving bank account, the post-tax returns are much lower than the inflation. India domestic inflation has seen around above 7% in the last year, and the US and Eurozone are seeing around 4-decade highs of inflation. The US today reported around 7.5% of inflation, and Eurozone also reported north of 5%, which also caused the central banks in their respective countries, the Fed and Fed, to raise interest rates in the coming month, the policy meeting which is scheduled in March. So given the sharp rise in inflation, which could push the Fed to raise interest rates by 50 basis points as well. However, the domestic central bank, which is RBI, have projected the inflation for the next year at 4.5%, and being very optimistic about the inflation number. If you see the crude oil prices, which are about $90 per barrel, which is the levels which I've seen in 2014, the 8 years back, and also the metals, the metal prices, be it aluminum or the steel prices, are at highs. So which is causing which is also putting a lot of pressure on the corporate earnings. The raw material prices are at highs which I've seen in 2007 and 8. And one of the reasons is the pent-up demand and also the supply chain disruptions which we are seeing globally. So in order to brace yourself for the higher inflation timeline ahead, the investors we suggest the investors to look at the corporate bonds for the near-term corporate bonds, which can help you to beat the inflation. So if you're an investor in India who is in the 30% tax bracket, so you should have the returns close to 8.5% in order to beat the inflation in India. So the corporate bonds in India are seeing a good traction given the interest rates are at all-time lows, and many corporates are using the internal accruals to fund their working capital. But however, some corporates are coming to the bond markets to reap the benefits of lower rates. So given this interest in the corporate bonds, the investors are chasing behind the yields in order to get good returns in this low interest rate cycle time. So since the interest rate cycles are expected to change, the higher interest started to uptick from starting from the coming month, starting with Fed. So the interest rates are will start to move up. So the investors who are targeting for the higher, the longer in maturity bonds will see the lot of duration, which can cause the drawdowns in the portfolio. So the government bond are also not enough for the investors to shield against the inflation. If you see the post budget, we have seen the 10-year GSEC rising up to 6.92%, and also the right now, if you have invested into the government bonds the 2 years back, if you want to exit now, that they would be seeing a good drawdown in the portfolio since the yields have moved up. So, so we suggest the investors look at shorter term corporate bonds, which are offering yields about 8.5, and 9%, and use that surplus, use that principal amount at the redemption and reinvest at higher rates. These are the couple of bonds which are available on our QuickInvest platform. Just for the illustration purpose, you can sign up on our platform, use our different parameters to narrow down to the set of corporate bonds which would rightly fit into your portfolio. So these are the three bonds which are seeing a good traction on our platform. So the first one is the Swatantra Microfinance. It's a partial redemption which pays out your principal back in every quarterly basis. So this would rightly fit in for an investor who is planning to time the equity markets, so they can get back your part of their 12.5% of their principal back on quarterly basis, and at the time they can choose to invest into the equities or reinvest that surplus into the bond market. And the rest to the TVS Credit Services and other housing finance, which are backed by good, strong companies, and also they have a good credits. So if an investor who is having any educational purpose, they require money after 1 or 2 years, or for their marriage or something, they can park the funds into such kind of a bonds. These are not any recommendations from us, but you should check with your financial advisor before you invest. But we suggest that these look attractive at current point of time, given the interest rate cycle is changing. So once you do the redemption, at that point of time, maybe 1 year, 1.5 years down the line, you can think about reinvesting the money into the equities, or reinvest at higher yields, which will be the case in 1 or 2 years down the line, and reap the benefits of higher interest rates. So you can also create a short-term ladder portfolio, and you can check out our YouTube channel more on how to create a short-term ladder portfolio, or download our QuickInvest app, which is available in on Play Store and App Store, which can help you to play out all these strategies. And also you have a couple of more bonds on our platform, be it like MLDs, or be it like the tax-free bonds, which can help you to rightly position your fixed income portfolio. And thank you for listening in, and do check out our the YouTube channel for all updates, and do subscribe to get timely updates, and download our app to experience the smooth process of investment into the corporate bonds. Thank you.